This is Eric Muathe with Muathe.com. Let's take a look at this number again as relates to the RSI. And we're going to be taking a look. And for starters, let's take a look at the uniform action rejection here, which gives us this nice reversal area. And of course, we see prices drifting lower after that. We have a double top RSI 69.1 rejection for these highs. Ultimately, we get a bias to the downside or a swing trade lower. You got double top rejection at the 69.1 level again during these highs here. And we can see that ultimately that is responsible for this drop. And here we come close to the 69.1 level. There's rejection, and we've seen a pullback over the last couple of trading days. Or I should have mentioned this is a 1-year daily chart. So of course that's one of the values of understanding the 69.1 level. By the way, in this double top areas here, double top here and double top here, there's another way to look at this, which is even though it's a small narrow area, we can see that those prices were improving and the double top was showing either the same level of resistance on the RSI. In other words, it's a small, very squeezed in negative divergence. Here we can also see the same thing, slight improvement in prices. Take a look at your RSI making a slightly lower low. In other words, it's a very narrow area, but in what is going on is you got prices doing the RSI making a double top. And so the RSI is either staying at the same level or a slight decline. And while this is going on, prices are improving. That's why I'm saying that it is a very narrow, but this double top areas on the RSI can also be looked upon as being short-term narrow negative divergence. And so combine that with your RSI 69.1, we can see how this gave us a reversal area during the two RSI 69.1 resistance levels plus negative divergence plus again the 69.1 rejection, 69.1 double top rejection, negative divergence also gave us that high. So you can use both of this understanding of the 69.1 level, combine that with your negative divergence understanding, and we can see that just understanding all those areas would have given us an indication that this was a potential reversal area, 69.1 rejection, potential reversal area here, double top, negative divergence on the RSI, 69.1 rejection, double top on the RSI, 69.1 rejection, including the small negative divergence, and here came close to 69.1, there was rejection, and ultimately prices pulled back. So we can see from this chart, if we take a look at all the pullback zones, they do qualify in terms of what we are discussing here. All the swing trades meet the 69.1 rejection and or short-term negative divergence. Eric Muathe, Muathe.com. As always, good luck, peace, and blessings. ESCS.